Well, good morning then, folks, as we head into European trade on Thursday the 17th of August, and it is the morning after the minutes last night. The Fed opened the door to further interest rate hikes, or I say opened the door to further interest rate hikes. They did suggest that a number of the participants, or a number of the board members, did suggest that another rate hike was possible. Now, they said some participants suggested no more hikes, but most suggested that another hike may be possible. Now, markets have been pricing in, or had been hoping for no more interest rate hikes, even an interest rate cut early into next year. So, the fact that the majority of them are still looking at another hike, still sticking to their most recent dot plot, has been taken by markets as a negative. Markets, certainly over the last year, have not really believed the Fed in terms of how high they would go with rates, and also how high they would hold rates. So the fact that they've come out, and the majority of the members, the committee members, are still looking at continuing to hike rates, or not say continuing to hike rates, at one more hike possibly is something that markets do need to take into consideration, and they have clearly taken that into consideration over the course of yesterday evening and into this morning. Now, we'll have a look at some charts once we get around to it, but they also did allude to potential for or kind of been open towards a pause in September, not looking at hiking rates in September, as they do fear hiking the economy into a recession, and the more hikes they do, the more chances of a recession there is. So they would like to try and avoid that if possible, but they still need to get inflation under control. So probably a pause. Still an 86% chance of a pause in November in terms of futures pricing, to the Fed funds futures pricing. But in the November hike, or the November meeting, should I say, there is still, or chances of increased to 36% of an interest rate hike in November. So chances of a hike increasing in November, but chances of a pause are still the most likely scenario at September's meeting. Apart from that, it's really all we've got to go off. I mean, China, the negativity surrounding China continues to be prevalent. Plus interest rates higher in the US, potentially higher for longer. China again struggling. Aussie dragged by jobs data, as you can see. China woes. So a number of negative things over the course of the evening. The Fed looking at hiking interest rates. China continues to struggle. Aussie employment data weak. So really, there's not a lot of positives in markets over the course of yesterday evening and into this morning. You can see stock index futures slightly green, but we'll jump over to the charts in a minute and look why that is not really the case. European equity futures lower across the board. Asia Pacific equity futures not too much going on in them, but still slightly negative. The Hang Seng and the CSI are slightly positive, but not exactly by any wild amount. We are still waiting for the European Open, so let's see how that opens up in about 10 minutes time. Yields in the US continue to push higher, so yields in the US continue to push higher off the back of expectations potentially for interest rates to go higher and be kept higher for longer. So the move in yields has continued on higher. US dollar slightly mixed, but we'll jump over to some charts in a minute and we'll have a look at the charts, and you'll see that it is bullish post minutes last night. The Aussie dollar and the Kiwi dollar down in line with China, which is what you would expect to see, but Aussie jobs data helping that push lower. Oil up slightly and the Canadian dollar up slightly. We did have strong Canadian inflation the other day, so that is obviously a contributing factor to that, but not exactly up by any great stretch of by any fantastic movement. CAD, Euro and Sterling, they are positive, but they're all positive against Aussie dollar, Kiwi dollar, and mainly the Aussie dollar and the Kiwi dollar, and kind of flipping around between flat on the rest of them. So Aussie, Kiwi down across the board, everything else relatively flat, flicking between fully green, flicking between red, which obviously means that they are flat on the day. So pressure on equities, pressure on bonds, support for the dollar and the Aussie and Kiwi are lower is the price action as we head into the session. And you can see now the downtrend clearly on the Aussie, Kiwi, Euro and Sterling. Post minutes on the Sterling was lower, but Sterling holding firm, which is interesting. Clearly a bit of underlying strength in sterling off the back of the data earlier on in the week from sterling. But if you have a look at the Aussie, Kiwi, Euro, dollar Swiss, dollar CAD, dollar yen, dollar index, all pushing higher. The interesting one, or the outlier, sorry, is sterling. So if you're looking to get long the dollar, I would avoid getting long the dollar against sterling. But if you're looking to get long sterling again, I would avoid the dollar. But the rest of these currencies seem a decent way to play it. We're speaking about long sterling yen, long CAD yen off the back of the recent economic data that we have seen this week so far. You can see the S&P, the Dow Jones, the Nasdaq and the Russell all lower across the board. That has also dragged the DAX, the Euro Stock, the FTSE all lower. The VIX pushing slightly higher, back up towards 17, but that's not too much of a worry for markets at the moment. But yeah, they say stock index upside, but I wouldn't be completely against a bit of a pullback, back to the levels that we saw post minutes. But markets haven't seemed to care about what the Fed have to say for a while. Will they care again, or will they just say, no, you're not going to hike rates again, you are done, and will stocks bounce back from here? That would certainly be interesting. But slight bit of inverse head and shoulders, pretty clear inverse head and shoulders across all of these. Decent bet to get long back towards the pre minutes release that you can see back in through here. So clear as day, inverse head and shoulders across the US indices. Kind of higher lows being posted across the European and the FTSE as well, but these US indices will be in focus as we go in through today's European and into the American session. We can see the 10-year yield, 2-year yield continuing higher. 2-year yield has rejected off 5%, which is interesting. It rejected, not technically off 5% the other day, but 5.023, but never managed to close above 5. But the 10-year reaches fresh highs, which is a more normalization of the yield curve. The yield curve is still inverted. You want the 10-year yield above the 2-year yield to indicate kind of a soft landing, or to increase bets of a soft landing, and to be comfortable about the economy going forward. But the longer that continues, the more positive it probably will be for markets. But yields pushing higher should keep the dollar supported in the near term. So let's see, do these moves continue? A slight bit of a pullback just in recent trade, but the trend is clearly higher, and the trend is your friend in trading. But we're getting moves against the moves from yesterday, which is to be expected. And you see the aggressiveness of the move. But oil lower with that weaker Chinese demand, the potential for weaker Chinese demand, coupled with the fact that the US are looking to continue hiking interest rates, is a contributing factor to some oil downside after the massively bullish run that we have had. Gold continuing lower with that yield upside, and really it is it's a move against the moves that we've been seeing. But does that roll over, and does that continue again in today's session? I'd have to imagine, due to the reaction yesterday, can't all be wrong and have to turn around. So we got a pretty clear hawkish reaction. What you saw is US dollar strength, equity weakness, and bond yield upside. That is clear hawkish sentiment coming out of those minutes yesterday. So I struggle to believe that they're all wrong, but we'll have to see as we head through into today's session. Get back here. Sorry, I was looking at just the US data. Let's get back on the calendar. Let's have a look at this quickly. My bad. Come around to the economic calendar. We can see on the docket for today, if we come back here and have a quick look at Thursday's economic data. We can see the employment from Australia slightly negative. Consensus was 15k jobs to be added to the Australian labour market, but they were taken away. Less people employed. The unemployment rate, as you can see here, consensus 3.5 with a previous 3.5. Unemployment ticking higher in Australia, which certainly decreases the need for future interest rate hikes in the country. Jobless claims will be out today, 1:30. Keep an eye on that, but markets will have to focus on the minutes last night, and there's no high impact data over the course of today. But Jobless claims 1:30 may shake things up slightly. Apart from that, not really a great deal for us to go off in terms of the economic calendar. So let's work off the minutes yesterday. We saw the we saw the initial reaction to that. Do these have a bit of a bounce back and then continue? I think a lot rests on what these yields do. So keep an eye on these yields for some direction across the other asset classes. I think looking to sell back into these, looking to buy. Looking to sell back into these, looking to sell or buy back into the dollar, should I say. Probably a decent bet going forward into today's session.
I think only like something like 5% of traders, I think, if I remember this correctly, I think 5% of traders have taken